No, not an actually. So, when you say companies stay private longer, I was just watching this on, so you think about timing with SpaceX going public and things like that. And then, there's a report of, IPOs were in high gear and now they slowed up. Of course, we had a wonderful government shutdown to deal with. But you're looking at, the question that came up that I thought was interesting. It's like, is SpaceX stealing all the the IPO money? Because it's so large and bringing so much attention. But what's happening is, I think also, Brian, to your point is, look at the numbers, 147,000. You want to dig into this a little bit? Sure.
Yeah, so if you look at the data on the slide, I think it's pretty striking. It tells you everything about where the opportunity lies. There's 147,000 private companies globally with revenues of exceeding $100 million, compared to only 19,000 companies worldwide. So I think private markets, it's becoming the kind of the primary market for large companies. Why are companies staying private longer? I think there's been an abundant late stage private capital, companies like venture capital like SoftBank, Tiger Global, and they're creating parallel financing systems that make public markets optional for growing companies. I think it's private companies face less regulatory burdens, so there's no quarterly earnings calls, no short seller pressure, and then I think founders also want to retain more strategic control.
Yeah, Eric.
Totally agree with that. And, I think a lot of it has to do with the regulatory burden that's been placed on companies and having to report on a quarterly basis and whatnot. That becomes quite onerous, especially, it used to be that, company at $100 to $500 million would typically go public. Now they're waiting longer because it costs so much money. It's just, and then having to report to the SEC and produce audited financials and everything like that. It just becomes burdensome.
Yeah, and what's interesting is well, go ahead.
No, I just wanted to add. So I think in our last webinar we talked about the Databricks. They're raising their Series L round, which is at $4 billion, and I think it was $134 billion valuation. And I think that kind of Series L isn't just about Databricks. It's about a broader shift. The private markets are becoming kind of the new public markets.
Yeah, and I was going to say, a lot of that we have the largest, as far as we can tell, distribution for IPOs to the retail market. So what's interesting is, we're part of that democratization that's given access to those IPOs. And so on our side, we're seeing, I think we have about 500 IPOs in the pipeline. Now, when they're going to go off, nobody knows. But it is interesting that they not delay it, but they seem to be prepping with private offerings too. So they, a lot of them are leading out with a Reg A so they can warm up the market and things like that. So we're seeing this mashup that we've never seen before of the democratizing of IPOs getting to the retail market and the retail market expanding more. And I think a lot of this 147,000 are companies that just have, chose to raise capital. And like you said, it's more affordable, less complicated, and a way for them to do that. But we're seeing a trend moving with the retail market having more access to IPOs as well. So I think that's important to note.
And I'd also add too that, they also, the longer you stay private, the less time you have to focus on fundamentals. So, if you are a tech company and, you're producing product and that's kind of been your focus versus focusing on cash flow, then it probably makes sense to stay private a little bit longer.
Yeah, that's a good point. However, most everybody that tells me that does retail cap raise said, wow, we didn't realize this was a business that we'd have to get into as well. So they're treating, I don't want to say it's a mini IPO, but they're getting a taste of it. I always wonder sometimes when I look at the numbers, are they staying private because they don't want any more than they've had to go through with their private rounds. You know what I mean? Because now they have investor relations and they have departments and people they never had before just on raising capital. But
Mhm.